Hi viewers, welcome again to the Fund Analysis channel. I hope you all are in good health during this pandemic time. Before we start today on this video, I would like to request you to pay attention to your health. Stay indoor and maintain social distance so that we can break the chain of this contagious virus. Viewers, for last 3 to 4 weeks, stock market has dropped drastically and market sees the rock bottom. Hence, this brings an opportune moment for all the young and risky investors to create immense wealth in a short time. Because of coronavirus contagiousness, countries across the globe restricted the movement of the people, which resulted a meltdown in the global trade and tariff. Hence, I feel that the economic situation is going to continue in green state for next 3 quarters. Hence, the fund that we are going to discuss today will provide you a significant return on horizon of 3 quarters. In this juncture, I would suggest people not to panic but remain invested on their long-term goal. Continue their SIP activity, and if they have lump sum money, they can invest in the mid-cap funds which we are going to cover in this video. This suggestion is my opinion and backed by my own research. By no means it is customized for any of the individual investors. Hence, if you need a customized version of your investment strategy, you may consult your financial advisor. Also, comment in the below video on what fund you invested in this crisis time. So, without making any delay, let's discuss about the funds. Our first fund is Mera Asset Midcap Fund. Mera Asset Midcap is a better fund in the midcap category. Its value dipped around 37% in last 3 weeks, where benchmark has dipped by 35%. The NAV range for the fund was varying around 9.5 rupees to 11 rupees per unit from its inception. After the market crash, the valuation for this fund is looking very attractive at unit value of 8 rupees 23 paisa. This is a good time to buy this midcap at lower cost. The fund has maintained a gap between benchmark and itself during the good period of the market. Once normalcy comes back, I anticipate this fund is going to beat the market by a good gap. The fund is also backed by fundamentally good stocks like SBI, Axis, ICICI Bank, HDFC Bank, Mindtree and Tata Chemicals. It is fairly new mid-cap fund which is launched last year July. So please invest in this mid-cap fund. My second fund is Axis Midcap Fund. Axis Midcap is another solid fund in the midcap category. In this crisis period, it has shown the resiliency. The fund has downslided by negative 29.5% when the benchmark crashed negative 35%. The NAV range usually capped between 38 to 46 rupees per unit through last year, but currently it is trading around 35 rupees per unit, which is a good value to acquire this fund. This fund continuously beat the benchmark during normal market performance period. Let's look at the risk versus return of this fund. The fund is less volatile compared to the benchmark and mid-cap category. It is having a standard deviation which is valued at 13.16. The risk factor of the fund, that is beta value, is 0.70 compared to mid-cap category risk which is 0.83. That means this fund is less risky than its category. This shows that the fund is less volatile and its return is also very good, which talks about an alpha and Sharpe ratio. And the depicted value for the alpha and Sharpe ratio is way better than its category and benchmark. At the return side, fund has a magnanimous return in 2017, around 43.6%. Around 2018 and 2019, when the mid-cap category return was negative or very meager, the fund fared well, generating a return of 4.59% and 12.18% respectively. Hence, my second choice is Axis Midcap. My third fund choice is Kotak Emerging Equity. Let's discuss why this is my third best choice. The NAV of this fund is very less now. It is even cheaper than the NAV of this fund trading before 3 years. Current unit value of this fund is 32 rupees per unit. The fund has beaten the benchmark convincingly in different years. At this moment, the fund has gone into negative 37%, while the benchmark is at negative 35%. Hence, it is a good fund to acquire, again with a very low value. Let's talk about the risk versus return now. Sharp and Alpha both are better than its peers and benchmark, whereas risk and volatility, that is standard deviation and beta, fares much better than the category and benchmark. Return in absolute term is good, though not like Axis Midcap, but fares better than category and benchmark. This fund in 2017 generated a return of 44.97%. In 2018, it was minus 10.66% and 10.24% in 2019. Hence, please go for the Kotak Emerging Equity Fund. With this, I am concluding the video. Thanks for watching this. If you like the video, please punch in thumbs up, subscribe to the channel and click on notification icon to get notified on the new videos. We'll catch up in the next video. Until then, bye bye and see you.